So I'd now like to introduce our keynote speaker, David Power, who is the Executive Chairman of Ergo Capital Structured Products and Chairman of Solus Capital Partners.
Great, thank you. Good afternoon, everybody. Wow, what a strange feeling to be actually at a conference and making a speech. I think it's about a year and a half since I last made a presentation, and certainly a year and a half since I was at a conference. So I'm going to do a brief summary of the aviation sector, how the pandemic has impacted it, and what the future looks like. So I have about 12 minutes to do that, which is a challenge. It's well over a year, as I said, since I last attended a conference in person, and that's not good. Thank you, Paul and team, for such dedication in organizing this event. Let's start by looking at what aviation looked like pre-pandemic. In 2019, 4.54 billion passengers flew on approximately 69 million flights annually, along with 6 trillion worth of goods in the cargo holds. This activity supported 10.2 million jobs, and that number is not including tourism-related jobs and other jobs supported by the aviation sector. So with the addition of those other jobs, it totaled about 65 million people. Aviation raised over 850 billion of revenues annually. So the total economic impact of the global aviation industry was $2.7 trillion US, some 3.6% of the world's gross domestic product. The travel and tourism sector accounted for 10% of global GDP. Passenger traffic pre-pandemic was growing at 4 to 5%, and as we know, the aircraft leasing and financing sector had an extraordinary period of growth, 10 years since the financial crisis. Aviation facilitates tourism, it facilitates globalization, it facilitates communications between people. Approximately 1.4 billion tourists were crossing borders every year, over half of whom traveled by air. Air transport is a driver of global trade and of e-commerce, allowing globalization of production, allowing communities to develop across nations, and facilitating business and innovation. In 2018, US dollars 6.8 trillion of goods were transported internationally by air, representing 35% of world trade by value. Aviation's clear advantage over other modes of transport contributed to premium services for same-day and next-day delivery services and transportation of urgent or time-sensitive goods. Around 90% of business consumer e-commerce parcels are currently carried by air. The e-commerce share of scheduled international mail ton kilometers grew from 16% to 88% between 2010 and 2018, and is estimated to grow to 96% by 2025. So, enter the pandemic. The coronavirus ravaged the airline industry, as we all know. Aviation experienced its sharpest ever decline in passenger demand during 2020, as global traffic fell 66% from 2019 levels. These are truly alarming and startling figures. International traffic, measured in revenue passenger kilometers, was hardest hit, with a fall of 75% year on year, on capacity down 68%. So it's a 68% reduction in capacity and a fall of 75%. Domestic demand was down about 50% year on year in RPK terms, and capacity also was cut by 35%. Splitting results geographically shows no region escaped the overwhelming impact of the virus, with all regions seeing overall traffic down in the 62 to 72% range. Some markets were helped by an ability to keep more domestic services operational during the crisis, with those in China and Russia being standout performers, albeit still way down on 2019 levels of demand. The air cargo sector a lot of people think it did quite well, but actually it saw the largest year-on-year fall in demand in the history of IATA data. During 2020, IATA states the global demand measured in cargo ton kilometers fell 10.6%. Figures were first collated in 1990. This is a massive drop. It outpaced the 6% fall in global trade in goods and services. 2020 was the worst year for European air traffic in 25 years. Europe saw a 70% fall in passenger numbers, a decline of 1.72 billion in 2020 alone. So truly alarming numbers. However, fast forward to today, and it's a story really of resilience, resilience, and resilience, and some quite surprising features of the pandemic. So after prior demand shocks, such as 9/11 and the 2008 financial crisis, there was full passenger recovery within 18 months. So with a largely V-shaped recovery in the wider economy, airline demand should be resurgent. Pent-up demand, we know, is very, very strong. So we're looking at full passenger recovery by 2024, but getting there closely by 2023, and to about 85% in 2022. Consumers have accumulated massive savings, in some cases exceeding an astronomical 10% of gross domestic product, and vaccination rates in most developed countries will exceed 50% of the population by the third quarter of 2021. Asia Pacific has the strongest medium-term outlook, with annual growth rates likely to be above 5% over the coming years, followed by Africa and the Middle East. Expansion in mature markets of Europe and the USA is set to be slower due to the older age demographics. Meanwhile, over at Airbus, in a production update last week, which contains surprises, Airbus will ramp up A320 production, targeting 64 units per month within 2 years. At the start of the pandemic, Airbus reduced production to 40 units per month. Longer term, Airbus wants suppliers to prepare for a possible 70 aircraft per month by early 2024 and potentially 75 by 2025. And meanwhile, over at Boeing, Ishka reports that the 737 MAX inventory lightens amid spring clearance orders, which is quite a catchy headline. So the airline and lessors have committed or recommitted to buying almost 300 737 MAX aircraft so far in 2021, including some remarketing whitetail units from Boeing's inventory of 400. More than 175 countries have approved the resumption of 737 MAX operations. 112 manufactured but undelivered MAXs are due to be delivered to Chinese carriers, and China is expected to issue approvals in late 2021. For the lessors, what's going on? Well, lessors, even as they deal with significant legacy issues, have huge surplus capital to deploy. It's virtually a sea of liquidity. And with a shortage of good sale and leaseback opportunities from good credits, low lease rate factors are actually the order of the day. However, bank margins have yet to reduce substantially, I think they will, to reflect these offerings. And wide-body and mid-life aircraft continues to struggle, as largely it's a flight to quality, and more risky assets are shunned. New private equity funds have poured into the sector in search of opportunity and distress, and on occasion are quite disappointed. And in the finance markets, last week Sky Leasing priced 663 million of asset-backed securities, Series A notes pricing at 2.45%, and Series B priced at 3.45%. And this is mouth-watering pricing. I'd love to get a mortgage on my house at these rates. The order book experienced significant demand. So with 10-year treasuries at about 1.65%, remain in really historically low interest rate environment. And meanwhile, in some airlines like United forecasts leisure yields from summer travel to exceed 2019 levels and upped its guidance. And over at Alaska Airlines, it plans to return to 100% of 2009 capacity by the summer of 2023, and then return to growth rates that are similar to pre-pandemic rates. So what are the key thoughts? Because it's confusing. What's actually going on? Can the governments act decisively in opening up air travel and borders? Clearly, a global digital solution is critical, as airports cannot deal with paper checks as the recovery takes hold. Will inflation kick in strongly and force central banks to increase rates, thereby threatening the V-shaped recovery and cutting off the money supply to riskier assets? Clearly, one of the biggest risks we face is the delicate management of the economies of the world coming off life support programs, which are designed by central banks. While airlines can experience a rapid rise in economy travel, as soon as the borders are opening, how long before business travel returns to contribute to their profitability? Given the massive scale of debt in the sector, how can it return to sustainable profitability? During 2020, airline debt increased from 220 billion to 650 billion. So are we just kicking the can down the road? As government support for the sector wanes, we reach a crossroads where the airline and the airline sector must operate on a standalone basis. Is this when we see whole-scale bankruptcies? It's interesting and surprising how few bankruptcies there actually were in 2020. So I think it was 56 bankruptcies in 2018, 46 in 2019, and believe it or not, around 40 in 2020. We witnessed the proposed merger of AerCap and GCAS, creating a mega lessor with over 2,000 aircraft. Will there be, of necessity, further consolidation in the sector? Is it just a cost of funds business, and is bigger actually better? Narrow-body aircraft values seem to have held up pretty well. However, wide-body aircraft values and older midlife assets are decimated. How do we all strive to take decisions, having come out of a pandemic, that are guided by balancing profit against protection of our most valuable assets, our families, our community, our people, and the environment? For the first time, I think people are really questioning what sustainability means. It's one of those words that's easy to use, but I think post-pandemic people will be actually really considering how they do live sustainable and meaningful lives, and how their companies can contribute to society. But there's one sort of simple and practical sense, and it's already occurring, that there will be a self-discipline within the aviation sector, and that's the bond and banking markets are pricing debt higher for less sustainable assets and business models, and that trend is already well underway. And the final question is, will oil prices spike as oil producers drill less following a Dutch court decision against Shell last week? Oil has gone from negative $40 a barrel, yes, negative, to over $65 a barrel, and could well go higher. So to conclude, what are the key lessons? I think our people are our greatest assets. Governments and companies don't rule the world. Actually, the bond markets and the central banks totally dominate in their leadership of the world during a pandemic. And the sea of liquidity which came into the aviation sector has held it afloat. The pharmaceutical industry did an amazing job in producing multiple vaccines in a year, whereas it would normally take 3 to 5 years at a minimum. I think we need to work on a global basis to tackle a pandemic. It doesn't respect borders, it doesn't respect self-interest. The industry itself has proven its resilience in the face of adversity, but it desperately requires governments to act quickly, to open up borders safely, and to make fast and rational decisions. And that's not really happening. We see them dithering throughout the world. Proper relationships and communications takes much more than a Zoom call, I believe. And with good availability of aircraft, maybe now is a great time to open up an airline with an innovative business model. Personally, I can't wait to get flying again. And to do something very unusual for an Irishman, I'm going to quote Winston Churchill. Hopefully I quote him correctly. This is not the end. It's not even the beginning of the end, but it is perhaps the end of the beginning. Thank you.
Thanks, David.